they can do. They can affect it adversely because they're going to influence you into making you feel like you didn't do enough. You didn't impress them. You didn't have enough size on that position to warrant a like or a comment from somebody or a reaction from someone. If everything you're doing in your trades is geared at trying to get public acceptance or my acceptance by a like or a retweet or something to that effect, you're doing it wrong. It doesn't matter what I think or anybody else thinks. Did you follow your rules? Did your model deliver like you expected it to do? Did you manage risk impeccably? If you've done that, do the same thing the next time. And that's all it fucking matters. That's it. That's all this is. That's all trading is. You're keeping the bullshit out. You're not letting toxicity come in, whether it be from your friends and family, co-workers, or social media. See, social media is that fucking relative that comes to the fucking Christmas party and shit that you know damn well every time they come there, they're drunk, they're disorganized, they're dysfunctional. They bring all the bullshit. They're the black cloud that comes in there, and every horror story that can be talked about, they're the one bringing it. And you feel like they've sucked the life out of the entire experience. That's what social media is. It's the unwanted cousin that you didn't want to have show up at fucking Thanksgiving. That's what social media is. And you all love them. You keep signing into it, loving it. Because you're addicted to that drama. You're addicted to that bullshit. And none of that's going to make you money. None of it. It'll distract you. You'll miss trades. You'll worry about bullshit. And the whole time, the market just presented something that you just missed. So you're going to have to be a guard of your attention. Who are you giving your time to? Are you giving your time to someone that's actively pursuing a better outcome for you? Or are you watching somebody that's trying to sell something to hopefully get money out of your pocket into theirs? Have you listened to other people pour themselves into you like you're getting right now for free? And this is real world shit. Like, I've lived all this stuff. Or are you getting a sales pitch later on? A coupon code. Some horse shit. Something you don't need. Okay? You only need the open, high, low, and close. That's it. Some logic as to why it should run to a high or a low, or a fair value gap above the price or below the price. Folks, that's it. That's the only 4 outcomes. If the market's going to move, that's it. If it's not doing that, guess what it's doing? It's consolidating. So now let's strip it down. Does it want to go higher? How do we know that? Did it take sell stops recently? And is the weekly chart likely to expand on some higher time frame level? If it is, and those criteria has been there, then you wait for a time. 8:30 when news comes out, or you wait for 9:30 equities open. And you look for evidence of displacement to show you that it wants to go there. Once it does that, it's just shift in market structure. Okay, great. Use your fair value gap. Go in and go and buy it. Put your stop loss where I taught you, right below the low. And then if you get stopped out, if you're going to take another trade, half of the leverage that you used before. What are you going to aim for? A short-term high if you're bullish, or a fair value gap above the market price that you are entering at. Once you get there, whatever that target is that you're aiming for, 75 to 80% of your position needs to be off. Done. Now, that's how you can do this model where you're aiming for several handles. Once you bank that, then leave a little portion on to see if you can get a runner. And many times you're going to find out that that smaller portion pays for in full some of your losing trades. So it allows you to smooth out all those imperfections in your performance. And that's something that you're going to want to have as a trader. Something that helps you weather all that normalcy in trading, where you think it's a straight vertical line of everybody's making money. You're finding out that there's an up and down to this sometimes. And you need to be able to keep that downslope, the drawdown, managed. So it's not just managing profitable trades. You want to manage your losing trades. When you go into a losing series of incorrect trades, and you're going to have it, you got to be able to reduce the amount of leverage on your trades. So that way, when you're in a losing series of trades, you're reducing the next trade you take. It's half of what you put on in terms of leverage. So if you took like, for instance, you see me start with many times 6 contracts. That's $300 per point in the S&P. Then my next partial, unless I'm really aggressive and I know I'm on side, I'll go from 6 to 3 contracts on my next pyramid, and then from 3 down to 1. If I'm really aggressive and I know I'm on side, that means I know I'm on the right side of the marketplace. I had all the things I look for that would cause me to be bullish. I'm going to go in with 6 contracts, and then my next partial will be 5. And then my next partial going in will be 4, 3, 2, 1. That's pillaring. Okay. A pyramid is where I start with the largest portion first, and then I work my way down, splitting it in half each time. That's my normal pyramiding. If I know I'm on side and I know have everything in my favor that it's going to go up, I will go in with 6, 5, 4, 3, 2, 1. And then many times, if I catch something else and it gives me something else that I can add another one on, I'll go one more single after that. And that's usually it. So if that's your working base of what your average multiplier is, that's my go-to. If I can't put a trade on with that type of gearing, then I'm probably not in a high probability setup. So I'll just do something with like 4 or 3 contracts and no pyramiding. I'll just do partials as it lets me. So you'll see those examples when I'm doing, the live explanations. I'll say, okay, this is a trade where I would have done 6 here. I'm going to say what I would do. I'm not going to push the button. So that way you can clearly see I am not front running anything, not even in a demo, nothing. I'm going to explain the logic of what I'm looking for, why it should be done this way. And that way you see it. Somebody's still going to bitch and complain that you're not trading ICT, but I'm still going to call it to the fucking degree of perfection. And they're going to miss the whole point of doing it. Don't be that stupid person, okay? Don't be a fucking Carl. There's no Employee of the Week award around here. But I think that's going to be it tonight. So I'm going to close this one, and hopefully you got something out of it. If not, I hope I entertained you for the time we've been together. Trying to see what I got here. Hold on one second. It's 1 o'clock in the morning. I've been going for 4 hours. It feels like I just fucking started. You want to go for 4 more hours? I can go for 4 more hours. Some of you are at work like, this motherfucker ain't stopped talking yet. No, I don't. I don't stop talking unless I'm sleeping. But anyway, I had a lot of fun tonight, and I feel so much better. And I'm hoping that you got something from this in terms of inspiration and realistic approach to setting monthly goals, why you should do it, and why you shouldn't do other things. And I tossed a lot of other stuff in here for no extra charge. And I don't know when I'm going to do the next one. I wasn't really planning on doing any of these in 2023, but you know how that works with me. Whatever I say, you're always going to get more than what you're expected to get. So anyway, tomorrow, turn your charts on at 10 o'clock. Look for a 1 or 5 minute short-term high or low, and study that for a liquidity run, and look for 5 handles. Don't start your charts or open them up before 10 o'clock, because you're going to be doing this exercise Monday through Friday of next week. And I'm going to give you other things that you got to start doing, but I want you to just spend time doing that. Don't do any demos tomorrow. You're just paper trading, or not paper trading. You're tape reading. No paper trading, no demo trading, no live trading. Okay. Just observe, but only look at the market right at 10 o'clock, and only look to 10:45. You should find something between 10 and 45. One little stop hunt. Look for 5 handles. If you don't get it, if you can't see it in real time, just after the fact, after it happens and you can see it for what it really is, then log it. Put that in your journal, and you'll see what I can do with that with your learning the following week, okay? And all of this will help frame tape reading and understanding how to find setups. And it's applicable to higher time frame charts. Don't think that this only works on these smaller time frames. It doesn't. It works on all time frames. But you have the logic that I'm going to share with you, as we go through this year. Okay. That's going to be it. I'll touch base with you, I'm sure, tomorrow by way of Twitter. Tickle on your Twitter. And until I do that, be safe.